All right, it's time for another episode of Random Thoughts from a Crazed Mind, the worst video channel on YouTube. And today I'm going to be talking about why I just put all of my money into 2-year brokerage CDs. Now, my last video, which I just finished actually, was about why you should buy brokerage CDs. So if you don't know anything about brokerage CDs, you might want to watch that video as a primer for what a brokerage CD is. So why did I just put all of my money into 2-year brokerage CDs? Now, this is basically, I made another video about why interest rates were never going to go up in your lifetime. That's like a 15-20 minute video. It actually was quite good, I have to say. I did a very good job. Stream of consciousness expressing that idea. And so you might want to watch that video. But along those lines, I have had a lot of money sitting on the sidelines, not making any money because I'm retired, so I don't really need to grow my money. I just need to really make income, and so I don't need to put my money at risk, and I consider the stock market to be highly, highly risky at this time. So I don't have any money in the stock market, and I've pretty much not had money in the stock market. Well, actually, I haven't really had any money in the stock market ever, as I've talked about in my minimalism video. But I don't regard the stock market as a good investment at this time, mainly because, as I said in that video, that I don't believe that there's going to be very much growth in the economy in future years, future decades. And I believe that the stock market is overvalued. So based on where the stock market is today, it's my expectation that probably at the highest rate of return that you will get out of the stock market is roughly 4% over the next 20 years. That's assuming that the stock market doesn't go down from here, which there's a very good chance that it does, because the Federal Reserve is trying to get a handle on inflation. And it's my expectation that they will get a handle on inflation, and the stock market's not going to go down much below where it is now, probably. But there certainly is a chance that it will. And so to have decent returns on your stock market portfolio, you're basically going to need for the S&P 500 to get down to about 2,500, which would be a huge, huge sell-off. And even then, you could potentially not have that good of a return. But at that level, probably the Federal Reserve tries to pump the stock market back up, as it generally does, and you probably would get a pretty good return, at least over the next few years. But given where valuations are today, I don't regard the stock market as a good investment. So I've had my money sitting on the sidelines, and I was making, the Federal Reserve was really trying to jack up the stock market. They really lowered rates, much lower than they should have been. And so I had a lot of money that I had invested long term get called in terms of bonds over the past few years, and so I didn't have a place to put that money. So it's just been sitting in money markets at, wherever I could put it and make any kind of return at all. And in just the past 6 months, everything really collapsed down to zero, as the Federal Reserve really went to work on getting the stock market up, and they were successful. So now we've got inflation, and now they're kind of thinking maybe it ought to go down. So what in the heck was I talking about? Oh yeah. So So that's basically the reason I'm going into brokerage CDs. Now, brokerage CDs currently pay 2.85% over 2 years. So my expectation is that the stock market is going to return 4% basically over the next 20 years. So a 2.85% interest rate on a brokered CD to me seems pretty darn good. Basically you're getting a money market for 2.85%. It's my expectation that the stock market could come down substantially, and if it does, another thing about brokered CDs that you can do with a brokered CD is that you can sell a brokered CD, unlike a bank CD. If you decide you want out of it, they'll charge you 3 months interest or whatever. I just had to break my CD so I could buy brokerage CDs because I did not expect this huge interest rate spike. So I need to take advantage of it while it was available. And that's what I did. So I lost my train of thought. What in the heck was I talking about? It's too bad that I can't edit videos very well, or I could fix this. But I like guerrilla style videos, and we're going straight ahead with this. So yeah, I put all my money into 2.85% CDs. Oh yeah, that's what I was talking about. You can sell a brokerage CD if the stock market comes down. So what will happen to me if I get an opportunity to buy stock? Let's say the stock market goes down to 2,500, which is the point that I would start to buy CDs or buy the stock market. I would put some money in. So let's say I have these brokerage CDs, and 6 months from now, the stock market goes down to 2,500, and I decide, hey, I'd like to put that money in the stock market now. Darn, I'm in these brokerage CDs. Well, what I can do is I can sell my brokerage CDs. Now, generally, you don't want to sell a brokerage CD because you will get ripped off. But if you buy a brokerage CD, you want to make sure that if you sell it, you're getting a fair deal. And generally, I have sold quite a few brokerage CDs, and I've always gotten a fair deal when I sold them. So I'm not that worried about it. But if I don't, mark me down too much, then I just won't sell it. But generally, I get a good price. And so what will happen is that if the stock market goes down sharply, interest rates will fall, and my brokerage CD will go up in value, because brokerage CDs are not, they're bonds basically. So your brokerage CD will fluctuate in value. So, it may be, it's worth basically $100, which is $1,000. It may go down to 99.7. So generally when you sell the CD, they'll probably scalp you for 1% or something like that. And so you would sell for $990. But if, let's say interest rates were to, the 2-year bond was to go down to 1.5%, let's say, and you're holding 2.85%, you're going to get a lot of appreciation in your CD because they also sell these on the secondary market. So they will buy the secondary market, your brokerage firm will buy it from you, and then they will resell it. So they'll take your 2.85% CD. Usually they'll just hold it in their own inventory and let it mature. But and there are secondary CDs that make it to the market, and you can buy new issue CDs, and you can also buy them on the secondary market, where you pay a commission of $1 per CD. So even if they don't have any in inventory, you can generally buy some on the secondary market, which I'm not going to talk about doing that, but if you ever wanted to know how to do that, you could put a comment or something. So even if interest rates go, if the interest rates go down, I can sell my CD at a profit. So, if they go way down to like 1.5%, I can probably sell that CD for, I'd get ripped off, but, if I want to go into stocks, and I really want to go into stocks, I could sell it for 105 or something like that. So I'd make like $50 per CD. On a $1,000 CD, you'd probably go up like 5% or something like that in that scenario. So, I would profit off of my CD just by holding it, and then sell it, and then I would be able to put it in the stock market if I wanted to. Now, I'm not expecting that to happen, but you do. What I'm getting at is that you have flexibility with your brokerage CD that you don't have with a bank CD. So, in that video that I did previously, I talked about how Ally had a 2.85% brokerage CD, whereas they had a 2% brokerage CD on their website for 3 years. So I think right now brokerage CDs are really an excellent investment at 2 years, because I do not think that interest rates are going to go way up. Now, I could be wrong about that, but even if I am, I'm making basically 3%, which I'm pretty happy with. So I'm not expecting interest rates are going to go up to like 4 or 6 or something like that. I think we pretty much have topped out on interest rates at this point. I mean, the short-term interest rates are going to go up, but these 2-year CDs are already forecasting a 3% money market, basically, right? So I'm basically buying my money market 2 years ahead of time and getting a higher rate. So they're forecasting 3% money market. I highly doubt that it's going to be more than a 2% money market, so I'm getting a heck of a deal at 2.85% in my mind. So that's why I'm buying a 2-year brokerage CD. So anyway, that's another video. 52 videos in 52 weeks. This is one more, and I just did another one before this. So, that's why I'm putting all of my money into 2-year brokerage CDs, because I believe that it's a very good time to put your money into short-term investments and get a good interest rate, because we have a very high interest rate level right now that is not going to be sustained, and we have a stock market that is a very poor investment, and any bond fund at this time is a horrible investment, because bond funds are basically bets on interest rates instead of investments in the portfolio of bonds, and they have high expenses, so, which I discussed in my last video. So that's why I'm putting all of my money into 2-year brokerage CDs. And this has been another episode of Random Thoughts with Crazy Mind, the worst video channel on YouTube. So long, YouTube.